Hi everyone, Jonathan here. It's November 5th now, and the numbers have come in for October of this year. We're going to compare them to October of last year and see where we are. Pretty much the way it is now is the way September was that just passed, in that sales are still down while prices are still up. This is going to be the case for the next couple of months. The average price in Toronto is still hovering in and around the $500,000 mark. However, sales have decreased from last October to this October by about 7.1%. Listings, meaning properties on the market, is up 6.1%, and active listings, which is properties that are on the market now and have been for the last little while, is also up 16.5%. So, I mean, what that shows you is that properties are not selling as fast as they have been, the last 6 months. Beginning of the year, the beginning of the spring of 2012 was very, very hot. Properties would sell very quickly. They would sell for full price or over asking. That has all stopped. The reason I believe that has stopped, or one of the reasons I believe that has stopped, or a catalyst to that, is because of the new mortgage rules that were implemented. They are affecting buyers. The amortization is no longer 30 years; it's 25 years. So now your average monthly mortgage payment has increased. So increased to the point where buyers may not be able to afford it and are therefore holding off until prices come down. Do I think this is indicative of a crashing market or a correcting market? Absolutely not. I do believe that it indicates a slowing market and a cooling market, meaning there aren't going to be a lot of bidding wars anymore. There aren't going to be buyers, fighting for one property and homes selling for, significant amount over asking, and selling in a day, for example. Now, before, where the average days on the market was 5, 6 days, depending on the area, it might be 2 weeks now, 2 weeks, 20 days. But this is great. This is great for the economy. This is great for the housing market. We needed to cool off. It was getting way too crazy out there. So now buyers have a little bit more selection. They can go in, they can negotiate on the price. They don't have to pay full price or over. However, prices have still not come down. Just because sales are down doesn't mean that necessarily prices have come down. If we see in the spring of next year the same type of thing, sales down, listings up, meaning more properties on the market, then we might see a reduction in price and prices might start coming down. However, they won't start coming down, I believe anyway, to the point where some people are saying 20, 25%. I highly doubt that. The only way that will happen is if interest rates go up. That's the only thing that worries me a little bit, that the interest rates are still at a historical low. If they do go up, I think that we'll have a correction in price. As to the amount of the correction, I don't know. But for now, everything is still fine. Properties are still selling. They're just not selling as fast. There's still a lot of demand out there because rates are low. So for now, if you're thinking of selling, you'll still get top dollar. If you're thinking of buying, you'll have more selection now. You'll still pay, a high price because of the market that we're in, but you won't have to compete. So that's the situation now, and we'll see how it goes in the next couple of months. But I'll keep you informed. Okay, thanks, guys. Have a great day.